That's closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Barron's senior market analysis writer Paul LaMonica, as well as Yahoo Finance's Jared Blickery, joining us here to break down the moves today. Jared, we're going to start with you on that close.
Well, all three majors today down in the red and all off by about 3 to 0.4%. I'll show you a chart of the Dow, which is snapping a 2-day win streak, barely eked out some wins over the first 2 days of the week. And you can see camped out all day in red territory there, but nothing too extreme. NASDAQ just barely turned green a little earlier in the session, but ended in the red. And the S&P 500, which is now down 5 days in a row, down about 0.4%. Chart looks pretty similar to that of the Dow. Also want to show you the small caps, just barely positive here in the final hour, but ending slightly in the red. Nothing much to look at there. And let's take a look at the sector action. This is interesting. Energy and materials, that'll be 3 days up in a row for both of those sectors. Everything else in the red there. Staples and utilities, which have been doing well earlier this week as a defensive play, those ended up in the red today. Consumer discretionary dragged down by Walmart and some of those disappointing earnings reactions. That's down about 0.6%. And inside the NASDAQ 100, not a lot of green. Alphabet is standout there in the upper part of the chart there. And then Meta down about 1.15%. Tesla also down very similarly. Not a lot of dark red. And Pinduoduo all the way down here at the bottom, up about 4%. That was a bright spot. And let me just go over to the China board, because we did see a number of Chinese issues today doing well, especially in the EV space. Xpeng up 11%, NIO up about 9%, and a few red spots in there as well. And I want to focus on retail real quickly here. Retail led down by Walmart, and you're going to see a lot of these other big box retailers that have announced this week or are about to also in the red. There are some of the little guys, though, a few spots of green that you can see. And if you want to end on some green, let's take a look at the cannabis board, because that has been lit up, and we've seen a lot of strength in this sector. It's very volatile, but we have seen some favorable executive orders and the potential for them in the recent past. And I'll send it back to you, Josh.
All right, thank you, Jared. Paul, I want to get you in here as well. Your thoughts on today's trade, Paul?
Yeah, I think with Walmart really dragging down both of the consumer sectors, because it's interesting that even though they are a retailer, they're technically in that consumer staples sector. So they helped bring down both the XLP ETF and XLY on discretionary. A lot of other retailers falling because of concerns about that Walmart, those comments on the the outlook with regards to tariffs and price increases, and consumers not necessarily liking that. So it's going to be interesting to see whether we get consumer stocks, if they're able to recover or not after the Fed and Jerome Powell tomorrow. If he hints at that rate cut coming in September, that could be potentially good news for some of these hard-hit consumer stocks, retailers as well.
And Paul, Jared was mentioning their small caps, which I know you just wrote about at Barron's. You know, let's say, Paul, let's say the economy stays resilient. Let's say the Fed does cut like the market expects it to next month. That would be a generally pretty good backdrop for those pint-sized companies.
Yeah, I mean, small caps have been lagging the broader market for some time, but they have picked up some steam in the past couple of months. And you're exactly right, Josh. There are hopes that because the Fed is likely to start cutting interest rates, that is good news. Both, one, it could help the economy, but also a lot of small caps have floating rate debt, and lower interest rates obviously helps their balance sheets as well.
How would you broadly, Paul, characterize valuations for the small caps?
Yeah, valuations for small caps also look attractive. They always tend to trade at a discount to the S&P 500, but right now they're at a larger than usual discount. It's about 30% below the S&P 500. That's the S&P 600's multiple on forward earnings. It's typically more like 25% of a discount. So they are cheaper than usual, but make no mistake, they're never going to trade at a premium unless you have a very strong domestic economy.
And when we're talking about small caps, Paul, and you were talking to folks for your piece at Barron's, were there certain sectors within small caps that they pointed out as maybe looking more attractive?
Yeah, home builders were interesting. Meritage and Taylor Morrison is two that could potentially benefit. Consumer names as well. Yeti is one that is a top recommendation of Francis Gannon over at Royce, who's a big small cap investor. So I think consumers and other rate sensitive companies like home builders definitely could get a boost.
All right. Appreciate your time on those picks, Paul. Markets, meanwhile, shift in the last few days. Big tech has taken a hit as investors pivot towards value. Small caps, as Paul was just talking about there, cyclicals. Nancy Prowl, Essex Investment Management, co-CEO and senior portfolio manager, joins us now. Nancy, it is great to see you. Listen, Nancy, the market's been counting on this Fed cut next month. Tomorrow, Jay Powell, Jackson Hole, you think he indirectly suggests, Nancy, that cut's on the way?
I don't think so. I think he's going to play it very close to the vest. We know all of the comments that have been made, the pressure that the Fed is under. And so my best guess, and it is just a guess, is that he will use this to really stress that theme of Fed independence, data dependency. There will be some more data coming out before their Fed meeting. We know that the most recent data has been mixed, but it's been mixed in a way that still says the economy is chugging along. Growth has slowed a little. Unemployment's a little bit worse. Job growth is a little bit worse, but it's not bad considering where we are in an economic cycle. And without having had a recession, it's natural to think that job growth is going to slow a little from the really rapid pace that we saw coming out of COVID. So we hope that what Powell says will be good enough to calm the markets. But remember, we're here in the end of August. Trading volumes are light. A lot of participants aren't around, so anything can really happen.
Nancy, does the market need a cut to move higher? I've asked that question to some folks this week, and some have said, nope, earnings are solid, the economy's resilient, we can keep moving higher even if we don't get that cut. Do you agree with that?
I think in the long run, absolutely, I agree with that. And in fact, I'm a little concerned that if the Fed does cut rates, particularly if they cut by 50 basis points, that we could see what we saw last September when the Fed cut and the 10-year went up 75 basis points over time. We certainly don't want to see that. We don't want the bond market to get spooked that the Fed is juicing an economy that doesn't need juicing. I think there'll be a knee-jerk reaction if the Fed doesn't cut, but we think that we would agree with the people who've said the economy is really chugging along, and there are areas that we think will grow whether or not there is a Fed cut.
Paul, I want to get your take on that same question. Let's say, hey, we don't get that cut in September. We've had some smart folks on the show saying they're not banking on that because they think inflation's warm. They'll say, all right, labor market's cooling, it's not crashing. If we didn't get the cut, could the market still move higher into year end, Paul?
Yeah, I think, as Nancy pointed out, earnings growth, particularly for the Magnificent Seven and those other, mega cap tech stocks, remains strong. So earnings should be able to keep this rally going, even if it fades a little bit. The thing that I'm very concerned about is, given that we now know that President Trump was not happy with the last round of jobs data, what happens if the jobs report that we get in early September shows surprising strength in the labor market? On the one hand, that's a good political win, but it also is inflationary, especially if you have wage growth. What's the Fed to do in that situation? The Fed, in some respects, a worse jobs report would be exactly what the Fed wants if it wants to cut interest rates. If that jobs number is shockingly strong, that could be problematic. And conversely, what happens if the numbers are weak, but then you have ADP numbers are strong? I think there's a lot of variables right now in the labor market and questions about the data that are going to be a concern for the Fed and for investors, both in the fixed income and equity market. Yeah, not an easy spot for Jay Powell and our policymakers. There's a lot of different cross currents there. Nancy, another theme I want to get your take on. This week, this rotation we saw, Nancy, out of tech. Did you chalk that up, Nancy, to just, listen, this is late summer, August, thin trading, or no, something more meaningful is going on?
We think that this is another growth scare in AI, similar, different reason, but similar to what we saw in January. What we know is Sam Altman came out from OpenAI and talked about a bubble in AI I suspect has an agenda for doing that. I don't know what it is. We saw the MIT report saying that a lot of companies who've implemented it haven't yet seen an impact. And with the market on edge and the market very nervous, that was enough to cause some profit taking. I will remind everybody, we know that they never ring a bell at the top. So the fact that we're all worried about when this is peaking, to me, says that combined with the fact that we have not seen any slowdown in the spend, we are just at the beginning of using AI, that we are far from overexuberance in the AI trade, and we would actually use this weakness to add selectively to positions. We would look for companies that aren't yet as well exploited in the AI trade, where they're either using AI or they're ancillary plays in some of the semiconductor and equipment and data center areas, rather than the most obvious names right now, just because of valuation, though.
And so what are some of those names, Nancy, you'd highlight?
Right, so a name that we like in that area would be a company called nVent. The ticker is NVT. They sell metal enclosures that will hold all those wonderful servers that you need to build the large language modules. So it's not a sexy part of the business, but it's a very important part of the business. Another way is in semiconductors, you're using a lot of advanced packaging. The company called Amkor, AMKR, that does advanced packaging equipment. They have a lot of domestic manufacturing, so it's aligned with President Trump and his priorities. And they're also aligned with Apple, who said they're going to move some manufacturing back. So that's a triple win, we think, on a name like that.
Nancy, appreciate your time, those picks. And Paul, thank you as well, sir, for joining me today. Always great to have you on set. Well, it won't be fun and games for PlayStation fans, as they'll have to pony up more money due to tariffs. We're going to have all those details when we return. More market domination, overtime, coming right up. Sony raising the price of its PlayStation 5 consoles by $50 each in the U.S. Joining me now is someone who is all plugged into this. That would be Yahoo Finance tech editor Dan Howley. Dan.
My goodness. Yeah, you just saw that, the PlayStation 5 Pro, $749 for a starting price. These are steep prices, right? $499 for the no disc version, $549 for the disc version. I'm just going to go out there. Just get the disc version. There's only so much memory on the no disc, and then you got to delete and everything like that. But this is a big deal. This, they say, is a result of quote-unquote economic conditions. They don't specifically say tariffs, but you can read between those lines pretty well that it's probably tariffs. These are machines that are built overseas, some in China, some in Vietnam. And it's something that's happened to a bunch of companies already. Microsoft's Xbox, they raised prices. Nintendo, oddly enough, raised the price on the original Switch, but not the new one, the Switch 2. They did, however, raise the price, the initial announced price on accessories. And I noticed when I bought my Switch, it came from Vietnam rather than China. The tariffs on Vietnam at that point were lower than the ones on China. So all these companies are dealing with this at the same time. And it hits at an odd point, because I look at the console that's in my, on my entertainment center at home, and now it's worth more than it was when I originally bought it, $50 more, right? The Xbox worth, I forget how much they raised it, but I think it was around $50, also worth more. A Switch that I had forever ago is now more expensive. So it's something that's going to impact the game industry as far as the hardware goes for a while. I guess we'll just have to see if they eventually lower the prices again. Obviously that happens over the course of a console life cycle. At this point, we'd usually be starting to see prices drop, not increase by 50 bones. So it's a lot.
How, if at all, my friend, do you think this price hike we're talking about here, how could it impact demand in the broader gaming industry? It's
going to impact demand. Look, you would look at something like, $749 is like, I wasn't going to buy the Pro to begin with, even though, I want to. It's just a big amount of money to drop on a console, right? The $500 is a lot. People are going to look at that, and the folks who were on the bubble who say, it's a good entertainment center and I can use it for, a game like Grand Theft Auto or something, when that comes out, that's going to help move systems for sure. But in the interim, I think people would look at that and say, I don't necessarily need this now, just because it's that extra money. And we're starting to see game prices increase. Nintendo raised the prices of some of their games. I believe the new Mario Kart World, $80. We were talking off air though.
Yep.
Everyone chill out. I know that $80 is a lot of money, but games in like the 90s were also $80. We've skated pretty well on game prices for a long time. The price to develop them is getting higher. So that's just, the way of the world. I think, though, that if you combine those two factors, it's going to be an issue for game companies, except for the likes of Epic. They have free-to-play games. They have Fortnite, Call of Duty is free-to-play, but they make a lot of that scratch on those, get the new skins, look like Seth Rogen or something in, Call of Duty, whatever, the Squid Game folks, Fortnite, you have 8 billion people in there. You fighting an Oreo and a banana or whatever. That ends up making them a ton of cash. So free-to-play is going to be making a lot of money. Yeah. These, don't expect people to be going out, buying a console and then, 2 games along with it and a controller. Don't even get me started on the price of controller. $80 for a controller? Whoa, that's nuts. I mean, like I said, it's the price of doing business at this point, but I do think it's going to impact how much people want to get out there and actually buy.
All right, Dan Halley, thank you, my friend.
For sure.
Well, as companies face the decision of raising prices amid rising costs, tariffs may be forcing one iconic brand that hasn't raised prices on its signature canned iced tea in 30 years to consider a higher price tag. Don Voltaggio, Arizona Beverages founder and chairman, spoke with Yahoo Finance earlier today on how the beverage company is looking at product pricing.
We're doing all we can to hold the line and tighten our belt, try to get through this tariff issue, and then hopefully that will subside and the uncertainty regarding tariffs. And if that does, we're going to hold the price for a bunch more years.
So, when you say you're trying not to, what kind of levers are you pulling on there, Don? And we should make clear that when we talk about the tariff impact for you guys, let's talk about that for a moment first. It's mostly on the material used to make the cans, right? The imported aluminum that you're using to make the cans?
Yeah, but most of our aluminum comes from recycled metal that's harvested in America. So, I think there's some manipulation going on with some of the producers to tariff affect things that aren't really being tariff affected because they're not coming across the border. And unfortunately, some things like that are out of our control, and we're trying to work through those as well.
Is one goal to try to produce, or to source a 100% of that aluminum from that U.S. scrap and recycled aluminum?
Well, a certain percentage of the aluminum has to come from virgin ingot,
Gotcha.
But that's a small amount. We use about 70 to 80% of it recycled in America. Aluminum is recycled, could be recycled thousands of times, which is the great part of aluminum. And the benefit to the recycling versus going in landfill, that kind of thing. But the point is, most of it comes from recycled metal, and then it's turned into block and sheet. Those are can manufacture.
So, Don, drill down into this a little bit for me. What kind of volume of cans are we talking about here? What effect is it having on your profit margins? And how long can you kind of get squeezed before, you say you hope not to. Like, what's the tipping point for you?
Well, the question is whether this situation is going to continue or it's going to come back to normal. Back in 2007, we saw a dramatic spike in aluminum as well. And then 2008, the economy meltdown, aluminum then came back to earth. That's the last time we kind of looked at whether we have to raise price or not. Right now, we had a tariff effect on aluminum even before the tariffs were put in place. So that indicates to me that there's a manipulation by the part of some manufacturers to affect the price of aluminum, even though some of those things haven't passed through to them. So, hopefully some of that stuff will come back to earth, and maybe some of the people who are certainly in the know will zero in on when that is happening. And it might be happening in other things like steel as well.
Well, let's talk about what could change here potentially. Have you been in touch with the administration to sort of make clear the effect that this is having on your business?
I have not, but hopefully at some point we can have a conversation, because some things unintentionally happen. Nobody in America likes to have things brought in if they can make it here. I've used the term bananas don't grow very well in Manhattan and coffee doesn't grow very well in Brooklyn. And some things have to come in from overseas. When things can be made here and made here efficiently, I don't think Americans would think that's a bad idea. But, if there's not a capacity, the capacity of making and smelting aluminum in America doesn't exist. And if, in fact, that doesn't exist, then what's going to happen is consumers are going to end up paying the tab because things that don't exist here and there's no capacity in reserve, then they're forced to come overseas. And I think the administration should take a look at that as well.
Don, of course, not all of your drinks come in cans. Some of them come in plastic bottles as well. So are you guys kind of trying to change your mix shift a little bit to try to deal with all this? And we should mention, on the plastic beverages, you guys are lowering prices, right?
Yeah, because that's tied to crude, and crude's down at the $62 level, which I saw the other day. And cost of making a plastic bottle has come down, so we're going to reflect that reduction and pass it along to the consumer. Our job as a manufacturer and a marketer is to give consumers a reason to buy our product, to grow our business. That's how we offset costs, and that's how we've done it over the last 30 years. It's not because we're selling the same amount, we're selling multiples of that, and therefore our fixed costs stay the same, and we're giving the consumer the opportunity to buy more of our product by offering great value as well as great product.
Lastly, in terms of other products you guys sell, you also, I believe, have a hard iced tea product. There's been some polling coming out recently that people are drinking less alcohol here in the U.S. I'm just wondering if you've seen any impact on sales of those products.
Well, those are new products, and they're growing in sales because they're new to the market. Right now what's happening in America is, in order to grow your business, essentially you have to steal it from somebody else because the overall category is not growing. And better products and better priced products, like what we've offered and are offering, are a way for us to grow our business in light of the fact that the overall market's down.
Time now for What to Watch, Friday, August 22nd. We're going to start off on the earnings front here. We're going to be getting more reports on Friday, including another key name in the retail sector with BJ's Wholesale. BJ is announcing results for the second quarter before the markets open. Analysts expecting sales momentum to come in solid for Q2, with the retailer still benefiting from shoppers looking for value and low prices, and the company's membership price hike earlier this year, giving a bigger boost to revenue. This is coming against the backdrop of what's been mixed earnings results from retailers like Walmart and Target this quarter. The sector is still battling a challenging inflationary environment. And taking a look at the Federal Reserve, all eyes will be on Fed Chair Jerome Powell's speech at the Jackson Hole Economic Symposium on Friday. Fed watchers will be focusing in on whether Powell provides any signals about his willingness to cut interest rates at the central bank's September FOMC meeting. Yahoo Finance will have continuing coverage from Jackson Hole, including Powell's speech at 10 a.m. Eastern. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.